TGIF Eagles, how's everyone doing today? So we've had a very choppy week in the dollar. We tried to make another new low, just like here, we didn't. If we do, it's not going to confirm. So it looks like the dollar bounce is going to be led by the pound. Pound is barely holding this moving average, made a new high by just a few pips. The high here was 139.44. The high here was 139.42, classic stop hunt. So 137 I think is viable. Also the Kiwi, I think the correction initially is going to be led. Kiwi did not make a new high. And even the strong currencies like Aussie are not confirming at new highs. This was a 70 here. And then the euro still hasn't made a new high. Okay, so still possible that the high is in. Even if we got one more shot up, just like the Dixie, it'd be a third drive, but they're stretching it out pretty good. So I know a lot's going to matter with what happens in the Senate, whether or not we have a government shutdown or not. But the way it looks to me is that someone's buying the dollar every time it's down here, here. Could we wash out one more time to 90? Of course, you know, I have some lines down there, just a shade under 90. I did. Maybe it's on the weekly. Point being that I think that we're much closer to some type of pop here, even if we're going to lower levels like the 88.5 or so. To me, it looks like the dollar wants to bounce here. I don't have those lines here anymore, but they come off these lows here. Looks something like this. Trend line. Worse with this. Anyway, it's something like this. And we're there. So I'm looking for some type of bounce here off these lows. It's starting to look like a wedge, in fact, to me. So it's either today or early next week that this bounce is going to take place. Something that is interesting is in the oil. It's the only commodity really that had a reversal week. It wasn't a real strong reversal week, but way overdue with positioning on the COT for a correction. Also, the S&Ps are popping, but not making new highs. This is the first lower high. This was a stop hunt, so if we roll over from here, you have something going. The NASDAQ, I think, finally up here, yeah, is a new high last night, but check out the RSI. It's right around the 75 level, but glaring divergence between this high and this high. Be careful in indices. And that's all I have for today. So still think that I don't do much on Fridays, maybe you scalp around a little bit, but my bias is we either have or there's just one more low shoe to drop for a dollar rally. I'm not expecting a plunge from here. I guess anything could happen if the government shuts down. You have a reversal week in the oil. It did not make a third high. It's kind of a right shoulder here. So I think oil has quite a ways to fall. So any rally there, just a grinding distribution top in oil. So Blake, how are you today? TGIF, buddy.
Hey, TGIF, Dale. Good to be here. It's Friday. I've been up since ridiculous hours this morning, and just to watch a little bit of a reversal in the dollar since mid-European session or so, and the dollar is looking a little bit better now. Talk about, there's obviously a lot of worry about a government shutdown, but the fact of the matter is, regarding a government shutdown, how how is it really going to affect the dollar, and is it markets, and is it going to be long term? I think a lot of the way the politicians are looking at it, the Democrats are looking at it, there's a lot more damage to be done to the just the political what's the word I'm looking for? More of a political ploy to make Republicans look bad, and in all reality, it's probably going to be a very short-term shutdown. I mean, it's not it might even be just over the weekend, but for the Democratic Party to make a point of it all. And so that's why I think you have equity markets that really aren't that worried about a government shutdown. And also, the dollar's starting to firm up here because people are like, okay, yeah, we and by the way, just so you guys know, the Senate's going to meet or deliberate on everything at 11 a.m. Eastern, and then after that, they're going to try to pass the stopgap by midnight. And it's probably going to be after the market closes before we find out. But when you say the dollar might have one more low left in it, before we see some sort of bounce, that could be true. And I'm not opposed to, and I've been scalping long the dollar this morning a little bit here and there, nothing too aggressive, but just kind of selling some euro, and I actually sold a little bit of cable this morning, but just making little bits because I don't want to get too aggressive because there's a lot of unknowns. But I think one thing that is probably likely going to happen here is we're going to see the week chart close in, and this is a weekly dollar index chart. And you can see we're in a big support zone. So that's something that we should note as well. It's like a huge support. And matter of fact,
90-20, I don't think it's a plunge protection team buying the Dixie at 90-20. So someone is there are people coming in believing in that support level, at least for now, don't you think?
Yeah, there is. And here's the thing, I want to look at it, we're going to, like I said, we're probably going to close and break down territory realistically this week. But next week, if we do bounce and we get past 91, when we get past 91, then I feel a little bit more comfortable about being long the dollar. And if we end up breaking through 91 next week, I'm going to start buying some dollars, and I'm gonna and not super aggressive, but I'll be buying some dollars looking for a retest of this downtrend line. Steve was in the chat room a little earlier, probably about an hour ago, and he made a really great point, which I'm sure he'll talk about a little bit later, is that the beginning of last year, everybody was very bearish the euro. Very bearish the euro, very bullish the dollar, and the dollar, basically hit new, it hit a new high around this time last year. Right on in
made a new low at 103.
Matter of fact, I think the inauguration was the 19th, if I'm not mistaken.
Yeah.
Oh no, it was the 2nd of January. But we're beginning of the year, and then the dollar just tanked the whole year. Now, does that mean that we're going to reverse here and the dollar is going to go up for the rest of the year? No, I really don't believe that. I think the dollar's got a lot of headwinds, especially with trade. And as I stated my case in the blog on our website. If you go to our website and you just look at the free blog, I stated on the website that the dollar's probably going to be very choppy, but moving lower over the course of the next year. And I still believe that. I don't know if we'll breach this trend line. And even if we do, I think dollar upside is probably fairly limited, but we could get a squeeze. the sentiment is so ridiculously strong for the euro right now. I was talking to another trader out of London yesterday, and he's like, yeah, I was just at this conference, and he goes, everybody is bullish the euro, and the bullish euro sentiment is more of a FOMO sentiment, you know, just the fear of missing out at this point. And everybody from leveraged money to managed money to institutional clients to everything, he's like, everybody is bullish the euro, and it scares the crap out of me. And I totally agree. I think that the euro could be a shakeout trade, especially if you start talking about what's happening this weekend. You know, we have the SPD vote for Germany, and if Angela Merkel loses the majority, her majority, you know, she has to form a minority government or go for snap elections, and she probably doesn't want to do either, but she might take the medicine, the less of two evils, and maybe a form of minority government, which would actually be euro negative for the near term. And so that is a really big risk this Sunday. So we have a couple of big risks evolving here with not only the dollar but the euro as well, which is weighing in on sentiment, and not to mention that you want to throw some fuel on the fire. Okay, you want to throw some fuel on this fire, is we have some major extremes. Now, when I talk about major extremes, I'm not just talking about the dollar. You're talking about equities, you know, you're talking about crude oil, you're talking about the bond market. You got yields that are flying right now, and 10-year bonds that are just taking an absolute dump. You got some pretty massive extremes, and if things start to reverse, what takes hold after that? You know, the dollar has not been used as a risk aversion tool, meaning that when people throw in the towel and they say, you know, I don't own any stocks anymore, I just don't want to own them anymore, people haven't thrown in the towel in the stock market in so long. I mean, we haven't seen any type of risk aversion in the market since, I guess you can count last year at the elections. Really, you know, you're talking, you know, early last year, and in 2015, when the markets were a little scared that we were getting a little wobbly. But we haven't seen really risk aversion in the market, have we, Dale? And so if we haven't, then if the market does get a little risk averse, you know, who's to benefit? I mean, the natural
risk aversion from bears that have tried it over and over again.
Yeah, well, the thing is if we get some risk aversion in the stock market, you know, because we're at such extremes, does the dollar really benefit from that? And because the answer to that question is I'm not really too sure. I'm not too sure because I don't know the answer, because we haven't seen it in so long. But it wouldn't surprise me if we did see some strength in the dollar if the market came unhinged a little bit. And I try to look around, Dale, and I try to figure out what is the reason why the dollar would rally, because the Kiwi's starting to break a little bit here. I got to point that out, and I'm going to talk about that next. You know, what is the reason for the dollar to rally? I don't really have one other than, you know, hey, if this market gets a little risk averse, maybe the dollar actually starts to rally on risk aversion for risk aversion reasons. Now, the other major event that's happening, the major development right now that I have to talk about is you take bonds. Take where'd my bond charts go? Here's the bond market. Market is just getting pummeled, right? Yields are rallying. The dollar yen is not going up. Matter of fact, the dollar yen is going down, and so the dollar yen's getting pulled a couple of different ways. You got yields rallying, but the dollar yen's not rallying. That's probably what's holding it up. But stocks are going up. The dollar yen's not going up. So what happens? You know, if we get a little sell-off in stocks, does the yen really start to gain some traction? And it really could. And remember, guys, and this is one of the reasons why the yen's so mixed at this point. We are in the apex of a huge triangle. This is a weekly chart going back to 2012. So just to give you a little perspective, we have a 500 pip trading range in a multi-year triangle, on a 6-year triangle. We're gonna break out. We are gonna break out, and we're gonna break out this year. And now, if you think about, like, okay, we're gonna break out this year. Let me revisit that comment. We're gonna break out this year. So this year, we're going to do this. Ah, crap, hold on. I didn't mean to do that. My Bloomberg chart pops up every time I do that. Let me move it. Okay. Okay. We're gonna do that, or we're gonna do that. Now, in order for us to rally, the stock market has to continue higher. Is the stock market going to continue higher? It could. In my opinion, I think everybody would say, well, the ultimate driver of the dollar yen is really bonds. It's not the stock market. Is it? Well, if it was, and the bond market's breaking down, why isn't the dollar yen higher? So I would argue
gold, Blake, excuse me, the gold seems to be the only part of the correlation that's still working. US dollar yen down, gold up. But you're right. Risk and yields.
Okay, so let's talk about that. Is gold going down? The answer to the question is no.
Yeah.
Gold's look.
Well, that's how it's been working. US dollar yen down, gold up. That's
right. So if gold breaks out, maybe we get some risk aversion, and gold actually breaks out above 1350. And gold starts heading back towards 1400.
Yeah.
You know, gold rallies, stocks go down, yen rallies. You know what I mean? It's like, so if I look at going back to this, you know, yen. If the stock market actually starts to reverse and gold starts to break out, this dollar yen is going to break lower, and that is going to catch everyone off guard. Every research paper I read, every morning I sit down and I read. Here, I gotta move all this stuff here. I read these emails that are from banks. Okay, you know, I read all these emails from banks, and all I get is just like crazy amounts of, okay, they're going to buy yen on dips. You know, at 110, there's going to be a bunch of buyers in yen. The market's not going to allow for, you know, Japanese buyers are going to come in, you know, around the 110.15. It drops below 110. There's going to be buyers all over the place. I've heard that same argument at 111. I heard the same argument at 112. I heard the same argument at 113. So, you know, at what point did the buyers capitulate and they just, you know, start buying yen and selling dollar yen? I mean, it could happen, you know, and so that's why I think it is very, very risky at this point in time that we have, you know, a situation that people are still buying, you know, the yen pairs when, you know, the risks to me seem like they're actually tilted for a lower, you know, higher yen, lower, you know, yen pairs. And I know that, you know, well, it's you know, we're in the middle of this range and it's hard to, you know, make that judgment while we're in the middle of the range. But guys, I'm just saying that, you know, these yen pairs look very, very vulnerable, especially if you take a lot of them that have had good runs. I mean, you got the euro yen that's had a great run. You had the pound yen that's had a, you know, that actually just probed up and looks like we might fail today after the week retail sales. Then you got, you know, the Aussie yen that's had a great run, Kiwi yen that's had a great run the last 2 months, the Canadian yen that's had, you know, well, it's, you know, heading lower right now, but it's had a great run, you know, in the last a couple of years, if the yen really starts to gain some traction here, it could really turn this world upside down. And that's why I'm sitting here looking at, well, what is like the next big opportunity in the FX market? And I'm looking at the dollar yen, and if this dollar yen breaks below 110, it's going to get pretty aggressive pretty quickly. Now I don't know if Greg is here yet. Is Greg popping in today? He is, but I don't think he's going to be here for a little bit longer. Steve.
Hey Blake, I think Greg is going to be here in about half an hour. Anyhow, Dale, we don't have an interview today, right? So we can use more time than usually for analysis, right?
Correct, Steve-O.
Okay. So I'm gonna be passing it to Steve in just a moment. Just a moment before this the Canadian data comes out, because I want to be watching it for that. But I want to talk a little bit about New Zealand. So the New Zealand PMIs came in at 5-year lows yesterday. All right. Now the PMIs were their business New Zealand manufacturing PMI, and the immediate response from analysts that I started reading after that is like, hey, that's gonna work its way into consumption in the next couple of months. That was a hit to the Kiwi in Asian trade. You can see right around here. I think this is it where the New Zealand PMIs came out. It was early in Asia, and then Kiwi hit brief new high, and then it's reversed a little bit. Then the Kiwi's under a little bit of pressure. Now, one of the other things that should be talked about is that there is political uncertainty surrounding New Zealand in their new government. Okay, the political uncertainty has been with this new prime minister that has just taken office, is that they are against they're more they're less protectionist. They're very free market. They want a weaker New Zealand dollar. They want less regulations. Blah 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 blah. All this stuff. Okay. So, Prime Minister Ardern, guess what happened to her today, Dale?
I don't know, buddy.
She's preggo. She's pregnant.
Congratulations.
Yes, first.
From my experience, probably that didn't happen actually today.
No, yeah, good point, Steve. I bet you that happened on election night, or the night that she found out.
Or the day after, yeah.
Or the day after.
So, and as you guys know, it's the longest term position you can take.
Right, exactly. But let's talk about her being she's pregnant. She's going to for her pregnancy, she's going to pass the baton to Wilkins, who's the leader of it was the party that joined her party, but that was the leader that everybody was really kind of worried about, thinking he was more of a whack job. And I've read a little bit about him back when New Zealand was going through election process, but he's a wild card, and he's going to have the keys to the office for a couple of months, and who knows what kind of damage he can do. And everybody's already on edge about the new, government as it is. So New Zealand is not only feeling some pressure from some weaker PMIs, but also, some political uncertainty resurfacing. Now, is it something that we should necessarily be worried about? I don't know, but the New Zealand dollar is, starting to show a little bit of signs of, maybe a little top heaviness here after, extending itself to. And by the way, you can see that dotted red line. I think if I went over to the weekly chart, no, it was the daily. So the relative strength was at levels we hadn't seen. When I pointed it out, we hadn't seen those levels since 2007, just before the financial crisis, we hit that in relative strength just this week, and now the Kiwi is looking a little heavy. So if we reverse off of this, you know, this relative strength, start pulling lower, the Kiwi could very easily come back towards the 72, 71 cents, towards the 200-day moving average, with certainty, with some weakening manufacturing data, and then you just sprinkle on some possible risk aversion. This Kiwi could be a couple hundred pips lower in the coming weeks. So that's weighing on the New Zealand a little bit today as well, and it's just some things that you guys should take note of as we head into not only a busy weekend with a lot of question marks, but also with the stock market that's very elevated, and we've already got some political uncertainty. So, you know, if commodity currencies come under a little bit of pressure from here, especially the Kiwi dollar, you'd understand why. And also just so you know, the Aussie New Zealand's making a nice little lift, and this is kind of it was noted at Barclays that this is what, you know, some of those traders are looking at right now as we probe the 110 level in the Aussie New Zealand. That might keep the New Zealand under a little bit of pressure. I shorted the New Zealand yen this morning at 85, and we're trading at 47 right now. And I'm looking at it as a possible double top. Not today, but I'm looking at it as if we break through 80, we've got a double top that'll, you know, take us back down towards this trend line here, which would be below 79 on the New Zealand yen. But it's just something that I'm personally, that I did this morning. As soon as I shorted it yesterday, late in the day, made a few pips after the PMIs, and I got up this morning, I'm like, it's still in the 80s, and then, you know, I sold it, and, you know, now it's down in the 40s. So it's been coming off, you know, since I've been awake this morning. You can see the last few hours I've been up for about 4 or 5 hours already. So anyway, just a few things that I'm looking at. Steve, I'm going to pass it over to you. I want to wish you guys all a great weekend. Remember, keep your risk tight as you can, especially if you're trading the euro with the German SPD vote on Sunday, with obviously the government shutdown looming that we're facing, and at 11 o'clock Eastern, 12 o'clock Eastern, you probably want to be paying a little bit closer attention to price action and what's happening in the news stream. Okay?
Love that triangle, Blake, that you showed. And you've been up so long. Have a great evening.
Thank you so much. I appreciate it. Even though it's 6:30 in the morning here. Steve, I'm going to pass it over to you. You guys and everybody listening in, thanks for listening in today, and enjoy the analysis from Steve and Greg.
Yeah.
All right, and Stelios, I'm sure will pop in too. So you guys have a great day.
Okay, Blake.
TGI.
Nice. How are you, buddy?
Thank you.
Hey, Dale. How have you been? What's up? Any news?
What do you think? What are you thinking in here, buddy?
What am I thinking? I'm seeing, you know, potential for some dollar strength coming in rather soon. For example, after the disappointing data today, we got some very nice potential on a few things. The Aussie, which hit our last target from an Elliott wave perspective, but I'm not going to show that since Greg is going to be with us, so I don't want to steal his thunder on that. The Kiwi, as you see, is trying to roll over. I'm watching this ascending trend line. We have our side divergence. These are for our charts. I'm watching a potential ascending wedge and ending diagonal here in the cable. You know, so a lot of non-confirmation. Yeah, a lot of non-confirmations yet.
The end of the week. How about oil, Steve? The last 2-day decline setting anything up for you in WTI?
Listen, if we go back to the dailies, I can tell you one thing for sure, that we broke below. Finally, we broke below this. Ascending, the very steep ascending channel. And, you know, we were expecting it to roll over. Of course, is that confirmation that it's moving a lot lower from here? No, it isn't. But I think that the chances are pretty high.
It's the first reversal week in quite some time. And, you know, in the interview I did, I showed the high on the monthly was a 200-month moving average, right where we stopped.
Here's the weekly as well, by the way.
Yeah.
Stelio, did I hear your voice?
We just had the Canadian net data, and the manufacturing sales number was very strong.
Yeah, I see. 3.4 versus 2 expected, right?
Yes.
Let's have a look at it.
Dollar CAD is not. What is it doing? It's not doing
nothing much, actually.
Okay,
yeah,
let's
actually,
go on to the weekend.
Actually, this is the second consecutive day that we've been trading inside the range, the choppy range that we had on the BOC on the BOC day, that quite long doji that we had. We are still sitting right exactly on the 61.8 and horizontal support. So in my opinion, nothing much to do here. Obviously, the reward to risk ratio is good if somebody wants in the very short term to be looking, perhaps for a rebound here. But my longer term bias remains for a move lower. Now, can we bounce from here? Sure. In my opinion, 126.50 can be tested from here, but it's better if we get more evidence, because the price action during the past, how many days is it now? 1, 4, 2, 3, 4, 5. Actually, for the whole week, we've done basically nothing. So without even checking it, I know that currently the weekly candle of the USD CAD must be something like a doji or a spinning top. We can confirm it by putting it here on the daily chart. Yeah, it's a spinning top. So after getting an inverted hammer, we're getting a spinning top. Basically, the market is more or less undecided on how it's currently consolidating before the next move. Now, if you look at it from a weekly perspective, there is quite a high chance that this is just a consolidation before resuming to the downside. Just saying. But as I said, a short-term rebound first is definitely not out of the question. So Aussie and Kiwi have hit, equivalently quite important levels, but we still need to see like a big candle down to say, yep, that was it. We're rolling over for at least a decent correction. A decent correction in this case should be, in my opinion, at least a couple of hundred pips. The cable, as I said, on the 4-hour chart looks good for a reversal. We have no confirmation yet. Stocks, on the other hand, they don't seem to care. Either the dollar goes down or up. They're currently consolidating near all-time highs. And I wouldn't be surprised if we get some positive news having to do with the government shutdown today, for example, to see another pop to the upside. But I do think that it's going to be short-lived. We should see, I still insist that we should see some kind of a short-term correction, and it should happen rather soon. Perhaps the new week, can bring something different. This is the USD yen, by the way. I just want to add, Blake covered all aspects of the USD yen long-term as well, which is, always a good thing to do, top-down analysis. I just want to add one little detail. I was always viewing this as a possible head and shoulders formation. If that's the case, then we got a perfect retest of the neckline, right? And that likely opens the door, as long as we remain below there, it opens the door for a push lower towards the low that we found in September, towards the 107 level, because the head and shoulders, if you see the head and shoulders target, is also roughly there. Okay, it coincides. So from a technical perspective, as long as we stay below there, a move down to 107.30 would be ideal. Now, what happens from there is a different story, because even if we go down there, we will still be remaining in a very long-term choppy range. So, I think that USD yen should be taken more in the short to medium term basis, because we still have some time until the market can determine what it wants to do, on the long term. And as Blake said, and I totally agree with that, how stock markets, in essence, how risk is going to be doing is going to play a significant role in that. Okay. What else? Nothing much to add about the euro. We talked about it yesterday. For the time being, I'm seeing a consolidation. Even if we move lower from here, 121 should be support. Below that, 118.50. I would need to see trade below 118.50 to actually start considering, the possibility that we might be looking for lower prices for a longer period of time. Until that point, I'm viewing the Euro USD as constructive. Even in the short term, if you look at it, this can easily prove to be like a little bull flag. So obviously the question is, can everything else against the dollar roll over and the euro not? No, obviously not. The answer is no. But can it overperform, let's say, on the way down other currency pairs? Sure, it can. So, obviously, it's very hard for the euro to decouple completely from what the other dollar pairs are doing. But in this case, you also want to be checking, which currency is over or underperforming, because that will give you a nice indication of what you might want to be doing in the crosses, in the cross pairs. Okay. Let's see, because we have several questions, so let me address them one by one. And I'm pretty sure that we'll bring more ideas. Yeah, some jokes about the the Prime Minister of New Zealand. Steve, can we visit USD Yuan? Yeah, sure. Why not? 61.8 tonight, very key area for dollar fade. I totally agree with you. I think I showed it, probably you weren't here, Luca. I showed it some days ago that a friend asked something. I don't remember, it was relevant though. Oh yeah, it had to do if I think that that the Chinese will intervene, in a sense. I totally agree with you. We were several days back and I told him that it looks good. It should at least test the 61.8 as you just said. Today we actually did test the 61.8, or anyhow came like, just a breath away. Listen, obviously, as long as the dollar remains weak, this currency pair will also be depreciating slowly, in a controlled fashion. There's no question about it, but it will. Now, another point here is that this is also the 2012 high, right? So this area is not only the 61.8, but as you see, there we go. So this is one more of the currency pairs that shows that this is going to be a nice area for the dollar to put in a rebound. But until we see that, there's nobody that can doubt that the move lower has been, quite impulsive in the short term, right? The only thing noticeable here having to do with a probable bullish case scenario besides the 61.8 is an RSI divergence. But as I said, we did test the 61.8, but I would need to see a lot more to get persuaded that this thing is turning higher, right? And even if it turns higher, it will have to overcome some obstacles like this area here, etc. So can it rebound from here? Absolutely. Does it need to do a lot more to convince me that it's moving higher? Yeah, it would probably need to do so. Okay, but this is a very good point because we are on very, very important critical support. Kiwi Yen 60-minute cap and handle and head and shoulders. That was obviously going for Blake because he was checking it, but let's have a look at it. Let's have a look at it on a 4-hour chart to begin with. Okay, you said 1-hour chart. Cap and handle on the 1-hour chart. Let's see. You are potentially mentioning something like this. Yeah, if we turn higher from here, that can be the case. But for the time being, it seems to be tanking with quite a, with quite a momentum, right, in the short term. Because anyhow, this is a 1 hour chart, so whatever we're looking at here can only be short term. Yeah, but I wouldn't pay so much attention. Actually, as you know, I don't even pay too much attention to anything below 4 hour charts. In my opinion, it's just noise, and I only use 4 hour charts when I've already taken a decision on something based on the daily charts. But let's have a look at the daily, since you mentioned it. Okay, this still has the potential of being a triangle. So this still has the potential of getting resolved to the upside. But if we break below 80.10, okay, let's call it 80 roughly, then things become very different. So, from a technical perspective, I would probably favor another push to the upside, perhaps for the structure to be over with before it actually rolls over. But regardless, if we do break below there, things completely change. So, in my opinion, as long as we are here, it's possibly a triangle, so nothing much to do unless if we're talking about short-term trading. So that's what I see about the Kiwi yen. And if we have a look at the Aussie yen as well, the Aussie yen potentially can be trying to put on a double top here. But, I don't like to call double tops in advance. We had already, since many days ago, marked this, that perhaps we will roll over when we hit that area up there. We did, then we pushed higher once again. Now we're retesting it. We're getting rejected, but that's only a single daily candle, and the daily isn't over yet, right? So before jumping the gun, let's see what happens from here. Sorry, going over some questions. So pound Kiwi. Stelio, a question for you to contemplate on. Steve Stelios, with Japan's yield curve control policy, how is it possible that the yen is no longer inversely correlated to the ZB? Euros, Euro Kiwi. You can think about it as long as, because we have questions about the crosses. So I'm going to have a look at both the euro and the pound crosses. So nothing has changed since yesterday having to do with the pound Aussie. I see the potential for another push to the upside from here, but then I would want to see what happens at 175.60. But the next short-term move looks to me like it might be to the upside. More or less the same deal with pound Kiwi. If it passes over the 190.70 area, I think that the next area to be looking for is the 194.30, and only if we break above there, I will be more confident that we've seen a low and the correction is over. Until then, I do see the potential, not the potential, but anyhow, I cannot rule out the possibility, of another push to the downside. Let's visit the euros and the euro Kiwi. Okay, euro Aussie has done more or less nothing since yesterday. We're still holding in the range of that large candle we had to the upside, but really, if we actually invalidate that candle, in essence, if we don't push higher from here, it's not going to look pretty. But I do see the potential of another rebound to at least back to the 154.50 area, let's call it roughly. Calling a bottom though yet, despite this being a very nice area that we might have done that, I want to see more momentum, because if you look at it, we had one day with momentum, and since then, the price action has been very choppy, very overlapping. So nothing that actually tells me that we've turned the corner yet. I mean, we need to see a lot more. Euro Kiwi looks a little bit better. Even if we get a rebound from here, I would be looking for the 170, 130 area. Only break above there will confirm that we found a low. Would be great if we actually found a low here. Technically speaking, would be, you know, absolutely amazing, because it will have respected the channel once again in a perfect manner. And today we're trying to form once again after getting this very bullish. Let me mark it. After getting this very bullish candlestick pattern here, we are trying to form another one here, a morning star formation, which is going to be, you know, a positive sign to at least see a push towards there. Okay. Now, what happens from here depends. If we get rejected from there, we might have another move to the downside. But if we do break above there, then I think that we can be comfortable enough to say that this was a low and we're headed to new highs, to at least retest, let's say, the channel once again, which at that point is going to be quite higher. You know, even see a remote possibility here of an inverted head and shoulders formation forming, like shoulder, head, shoulder, which is also going to be a bullish pattern, but, you know, we need to give it a little bit more time before we can say with certainty. Anyhow, all these pairs have the potential of resuming the rebound, even having found a bottom. But, you know, it's not easy calling a bottom. I mean, we need more evidence, right? So, you know, probably a little paying attention to it and taking decisions a little bit later with a little bit more confidence is the way to go. Let's see what other questions we have. ECB source comments pushing euro higher here, USD CAD view. Any hints about gold? Yes, Colin, it was the Bund. Steve, you mentioned yesterday about an important chart to keep an eye on. Believe it was the Bund? Absolutely, it was the Bund, and it was the 159 level on the Bund. ECB source comments was pushing euro higher here. Okay, what were the comments? Stelio, did I miss any comments?
Yes, they said that they're not particularly worried about the euro appreciation, recent euro appreciation.
Of course they're not.
Yeah, it's slightly different to the recent past. You know, when euro dollar went above 120, there was always some kind of reaction. But yeah, I was thinking about the question that who was it? Jason said about Japan's yield curve control policy and how is it that the yen.
Yeah.
I'm assuming he means the dollar yen is no longer inversely correlated to the two treasuries. Well, the standard correlation always was that if treasuries sell off, then obviously the yields go up. That means the dollar is strengthening, you know, because yields go up when the economy is doing well. So there's an inverse correlation between dollar yen and treasuries. Now that the Bank of Japan is effectively controlling the whole of the yield curve, so they're controlling the base rate or whatever they call their you know the standard interest rate and the 10-year point as well. The thing though is, and this is something I always keep in mind when you're looking at spot FX rates, they will be affected by major moves like treasuries breaking support and, you know, yields going higher or anything like that. But at the end of the day, you're comparing two things which are very different. You know, you're comparing an spot FX rate and a 10-year rate. So it's they will affect each other, but as with everything else and every other correlation that we've seen over the past few years, you can have short-term moves which don't really make much sense. So you can have them moving the same way, or you know, in general have a correlation which does not work for months, you know, days, weeks, months. So that relationship should hold. But there can be times where it doesn't for a continued amount of time. So, you know, it's all, you know, all these theoretical correlations. It's very easy to say yes, this is how it should be working, and end of story. Well, it's not like that, and I'm sure Steve, you agree on that. But
absolutely.
All these things.
By the way, Grega is going to be soon with us. I just want to remind people. You know, Grega should be soon with us. So any questions you also have for Grega, through Elliott wave, he's going to shed some light in the potential for some moves on not only in the short term, but as you know, the huge benefit of Elliott wave is that it can also give you rather accurate targets in many occasions, about how a move might extend and how far a move might go into the future. So stick around. We don't have an interview today. Greg is going to be with us. Stelio, was touched on. People are asking about gold. Your viewpoint on gold, by the way, since we're talking about metals?
My long-term view on gold is bullish, and it has been bullish for.
We will be talking.
Yeah, it has been bullish for the last couple of years, and it's it's kind of consolidating. In 2017, it was kind of consolidating. I'm still bullish on metals for various reasons, even though yields seem to be rising, and short-term correlation with yields is inverse. But when I look at gold and silver, they're dollar-denominated assets, and I always go back to the fact that the U.S. has got a $1 trillion deficit every year. As long as this does not reverse, then I don't see how in the long term, and long term I mean years ahead, how something like gold and silver and all these real assets will not eventually just keep going. Now there will be big bumps on the road.
I agree with you. And you know something, there is also another potential for gold to appreciate. I mean, even if yields keep going up, don't forget that gold is not following yields. Gold is following real yields. Real yields. Exactly. It's not following nominal yields. So in essence, for the people that don't understand the difference, they're not following the nominal yield of a treasury. They're following the difference between the nominal yield and the real inflation. So since it's more or less consensus that yields are not going back to where they were in the past, and the new normal for yields is going to be, I mean, at least everybody agrees on that from the central bankers, is going to be a lot lower than it used to be in the past. We're not going to see again like 5% and 6% rates, or at least, according to what they have in mind, because you never know what's going to happen. So if inflation actually starts picking up, or I'm going to add something here, or if the market actually thinks that inflation is higher than what it currently is supposed to be, gold has every reason not to be following the nominal yields, but what is perceived as real yields, right? So if we have only limited upside in rate hikes from this point on, let's say we go up to 2.5 or to 3%, and inflation climbs, let's say, to 2 or 2.5%, still the opportunity cost of holding gold is going to be quite low, right?
Yeah. And the other thing, I mean,
and with the business cycle being very mature, and potentially another recession coming at some point sooner rather than later, people will have an extra reason to be holding on gold, right? Because then you have a big upside potential if things go south.
Yeah. And the other thing, which, okay, I'm going to put my conspiracy theorist hat now on, but governments have liabilities which are linked to inflation. And
absolutely,
what have governments done to the inflation calculation in the US, everywhere over the last 10, 20 years? They've changed them. They tinker with them all the time. And they
tinker with CPI all the time.
And the net result is always to make inflation look lower. I mean, if you live a normal life, you know what inflation is. But, apparently inflation is, 1.5% or 2%. Well, it's not really that.
Yeah, it's not really that indeed.
So that's another reason why I personally think, I agree with you, Steve. I think inflation and yields are never, or not never, but I don't think realistically they're going back to where they peaked last time. We had 8.5% rates and 10-year yields at the double digits. I don't think that's going to happen
No. Yeah.
Unless there's a big change in the whole global scene. I don't know what might cause it, but there seems to be an incentive to keep yields and inflation low, so they're going to do that.
Now, a friend here on the webinar, Tosin, says the reports on Twitter say that the report on ECB euro appreciation is fake news. Okay.
Oh, great.
Okay, so let's have a look at gold and silver until Greg is here. I knew that he was in traffic, so I still see the potential. I offloaded when we dipped down below my cost. I actually did it just above my cost to be absolutely exact. You know, I'm writing what I do in the chat room, so if you're there, you know that. I offloaded part of my position here in gold because I wanted to lighten up. I did the same with Aussie when it dipped down the day before yesterday because I wanted to lighten. I had done the same several days ago in the SPX. I wanted to lighten my positions because they're reversal positions, and I want to give myself the ability, you know, to add higher because I still believe that gold. I know gold is having good day today. But I do believe that all of these assets are bound for at least a decent corrective move lower. And I don't think the couple of days that we had is enough for gold, as I don't believe it is for the Aussie, the one day we had, or that single down day we had in the SPX. So I've lightened my position to 2/3 of my regular position at each, so I can, you know, I can have more firepower to add higher. But I do. Yes.
Sorry to interrupt. Sorry, I can finish your what you were going to say.
No problem.
I'm just going to say I think I agree with you. I think we're probably going to get a little push lower, which will probably coincide with a dollar push higher. But what worries me a little bit, if I was short metals and gold in particular, is that we're lingering now about $20 below the high, the recent high, which was what?
No, I agree with you. So I also see the potential of another push higher.
And
same,
you know,
with
as long as we're that's a move that can be done in one day, and as long as we're that close, I would be a little bit nervous. I agree with you. I think we're going to probably see a leg lower, but just it's one day move that can make it, and that could be a big event. I could take a lot of stops out.
By the way, pound is pushing lower from here. It's now just a bit the ascending wedge I showed on the 4-hour chart. So it seems that, let's have a look at the DXY once again. Okay, DXY is actually putting in an inside day today. So yesterday it gave us an outside day, as you see. Today, so far, it's giving us an inside day, and what is at the moment a doji. So as it seems, we have stalled after testing the head and shoulders target. The more we stay range bound, the higher the likelihood that this is going to be a short-term consolidation of some kind, a triangle perhaps, or who knows, and then get one last push lower before a bigger correction towards the confluence of supports we have at 88.50. So, if we don't rebound from here soon, let's say Monday, Tuesday maximum, then I would expect that the next move for the dollar is going to be lower again. But I would be really looking forward in loading up some dollars if we get down to that area. So we either break higher from here and come up to retest this area at least, but we need to do it soon, as I said. Otherwise, move towards 88.50 before a larger rebound. So that's how I see the potential for the dollar to move from here. There's a friend asking about CAD yen. Let's have a look at it together, and then Greg is going to have a look at it. Let's hope he makes it actually, because let's see. Okay, the CAD yen. So the CAD yen in essence have given us a double top. That was a very nice, we marked that was a very nice evening star formation. I said that for us to have, to turn bearish, we need to at least break below this area. Otherwise, a rebound from that horizontal support was probable. I had marked it like you see here. But not only we broke below it within 2 days, but we actually seem to be more or less consolidating, having now retested, right, that area that we were looking for potential support as resistance. So I have to tell you that, you know, as long as that area is holding here, the, let's call it 89.60 area, roughly, you know, there's a good potential for at least one more push lower towards the 86.70 zone. So if you're asking me where the next move is going to be from here, I would tell you that very high probability lower, very high probability lower. The next leg, I mean, right? I'm not talking about long term now. I'm talking about shorter term. USD CAD. Let's have. We looked at it before. I'm just going to briefly tell you that we've stalled at the 61.8. My medium to long term bias remains for another push to the downside, but I do see the potential that if we rebound from here, we might retest once again 126.50. Okay, Colin. Downward channel Euro-Aussie. Abdul, what? And Abdul mentions the pound yen as well. Abdul, first of all, tell me which time frame are you looking for the Euro-Aussie? And let's have a look at the pound yen. Okay, pound yen is meh. I mean, I really wouldn't know how to draw the technicals here on this pound yen. I think the better interpretation probably at this juncture would be ignoring that peak for now and look at it like this, in which case perhaps something like this transpires. Something like this. So can be an ending, can be an ascending wedge, an ending diagonal of some kind. So that's the only thing I currently have, because as you see, the price action has been extremely choppy. So, you know, as I said, like, I don't remember which webinar it was, not looking forward of trading this. I was expecting likely when we found support here, a push to new highs. That happened, but we're rolling over again. And, you know, it seems that for every high we're making, the momentum is less and less. That's why I'm inclined to be viewing this potentially as an ascending wedge. Greg is going to be joining us, by the way. He just gave me confirmation. No sound on YouTube. Stelio, can you verify that and write it to Velo?
Yeah, I'm gonna go right now.
Okay, perfect. USD ZAR, absolutely. USD ZAR is by far one of the best behaved exotic currencies. There we go. We broke below this very bearish triangle. We're retesting it today. In all honesty, as long as this trend line holds, I see no reason why you want to be. Hey, Grega, I hear your microphone. Grega? He's connecting. No, I can see him. So I find no reason for us to be bullish, honestly. Just look at this. We had a big move lower, a corrective move. We broke below it, and you know, every formation we've been making since is a bearish one breaking the downside. So I think USD ZAR still looks very good at the downside. Greg, can you hear us now? You are self-muted from what I say, by the way. So I think USD ZAR looks good. I do see some RSI divergence here. But you know, even if we get at some point a bounce, I would really be looking to sell them. As simple as that. So I think ZAR looks very good. At some point, obviously, we're going to get some rebound in the dollar as well. But even if that happens, at the worst case scenario, we'll be looking for a move back to 1310 before resuming lower. But even in the short term, it looks very, very bearish. So perhaps at least one more leg lower before then seeing a bigger correction and then resuming to the downside. As I've said, we also wrote it in the article, I do believe that the dollar is going to be bearish this year as well, but I do not believe, same applies with Blake, etc., that it's going to be like a one-way street. It's not going to be an easy trade like it was in a slam dunk move like in 2017, that the dollar was moving down for 9 months, then recovered like for 2.5 months somewhat, and then resumed to the downside. I think it's going to be a lot more complex than that, and we're going to be having rebounds and stronger days. Greg is having some trouble with his voice, as it seems he's going to relog. Yeah, he's relogging the webinar. Okay, let me see what other question we have, and then Greg is going to. Oh, we had a question about the pound Swiss, actually. Yeah, let me cover that, and then Greg is going to answer your questions or show us what he thinks. Okay, if the question is if the pound Swiss is bullish, we had said back then, because we had a conversation about the pound Swiss quite some time ago, saying that it broke above this triangle and it should be good to move to the upside. My problem here is the Gregor? Okay. My problem here is the following, is that this move has no impulsive characteristics. Just look at it. You can see it on your own. I mean, look at this, right? Does this look like an impulsive move to you? It doesn't to me. It doesn't. So I liked it for a move higher when we were breaking out of the triangle. It happened, but something doesn't feel right here. I mean, it just makes me believe that the next move is lower when we break from there. That's what I see at least. So I would be very careful. I would be very careful. Not the kind of move you want to see after a strong rebound. Very, very choppy. Very choppy. So you can be bullish, but if we break this trend line that I'm moving here, you'd better get out. At least, that's how I view it, right? Because if we break below there, it's gonna be, I mean,
hey.
This track. Hey, Gregor.
Hey, can you hear me well?
Yes, okay. We can hear you well now.
Okay, I have some issues with mic.
Yeah, I saw it. By the way, I'm sure that even without telling you the chart, you would agree. How does this look to you? Doesn't this look like a correction?
Yes, an ending diagonal, as you labeled it.
Yeah.
Yes,
impulsive move lower, corrective move.
I would look maybe for another push higher.
For another push higher, very likely, something like this, and then.
Yes. And then turn.
Yeah. But anyhow, this structure smells correction all over it, right?
Yes, limited upside, I guess. So maybe this will correspond with cable overall. So where I also expect a turn down. So we'll see.
So perhaps the triangle interpretation was a valid short-term interpretation, but perhaps the longer-term interpretation here is something like this.
Triangle, but it was a triangle in wave B back then.
Yeah. So something like this. What do you think, Gregor?
Yes, perfect. ABC up with an ending diagonal. We have a much slower price action since September of 2017 compared to that first leg up that was in October 2016. So it looks like that we are losing momentum.
Yep, absolutely. I mean, look how choppy and overlapping this price action is. Nothing that has to do with an impulse for sure.
Yes, we have actually a lot of similar structures on yen crosses.
Okay, why don't you take over? Let me give you the screen and show us some wave magic. By the way, did you see my short-term count on the Aussie? Do you agree with it?
The one that you sent me?
Yeah.
Just a second. Yes, we expect a turn. Anyhow, yeah. Yes.
Okay. Good.
It's definitely well. Show my screen. So you can see charts, right?
Oh yeah, absolutely. We can.
Okay. So actually, what I have just noticed that we have some interesting reversal down on pound yen. So I've been tracking this ending diagonal for a while.
I was just saying that it looks to me like an ending diagonal. I have to be honest, I spotted this as an ending diagonal potential today. Before I was viewing it in a completely different structure, but today it hit me that, a new incremental high and then rolling over, perhaps then I should ignore the high that you've marked there as a third wave high and look at it as an ending diagonal from there. I actually said it just before you logged in. So I'm glad you see it the same way.
Yes, and also if we take a look at this price action since the end of 2016, you can see that recently when we were breaking to a new high. Okay, each time there was very low or slow momentum to the upside, right? Compared to the first leg that we have seen. Okay,
absolutely.
So it tells me that we are losing, that bulls are losing gains here, and that sooner or later we will see a significant reversal. And normally, ending diagonal is very good evidence for a coming reversal. Okay, because it's a slow price action, still at a new high, but it's not very strong. So normally, when strong move occurs is in the opposite direction. But what I like is that today is Friday at the end of the week. So if we will see maybe a little even more weakness today at the end of the US close, then I think that this could be some nice indication that we will, at least at the start of next week, continue lower. So I would watch out carefully intraday charts. If we see a 5-wave drop, then I think it can be a good shot to the downside here. Okay. Also, we have Aussie Yen in ending diagonal.
Before we go to the Aussie Yen, since we were on the cable, I'm also seeing in a 4-hour chart on the cable an ascending wedge, which I haven't done the short-term count, but if you look at a 4-hour cable chart, is this also an ending diagonal that we have? Because on a 4-hour chart, it looks like that.
Cable?
Yeah.
I don't know.
I mean, I ignore the spike that you have as wave, as V there, because that's a spike on the 4-hour chart. If you look at it also on a daily perspective and you ignore the spike, it looks a little bit like an ending diagonal price action, like, it's choppy, slow, ascending.
Maybe
and
more than expanding diagonal, but it's still diagonal.
You're looking now longer
here
term.
Here I have this labeling. Okay, it can be an expanding diagonal.
Okay, so you expect that we might push higher from here before lower?
I think that we are in some kind of a reversal zone right now. Okay, so I'm just waiting what will happen here. Also, notice that we just touched 100% level, so it is actually wave C were equals to wave A measured from end of a wave B. Okay, on this second zigzag. So I think
that's a second zigzag, yeah, WXY, yeah.
Yes, so I take this distance, this leg, and took the same distance, compare it into wave C. So actually we are now at very interesting levels, I think. But of course you need to see an impulsive decline in 5 waves, aggressive fall, because this is definitely not an easy call here. I will not say that top is here, but if we go back below 1.3612, then this would be very strong indication that top has been in place. Why? Because I have here labeled an alternate count that maybe this could be wave 1, okay? This is wave 2, and this is maybe wave 3. But if we fall below this level, then my wave count, the bullish interpretation, would be invalidated. And in such case, I would be even more confident that market is turning. Okay, so
136 roughly. 136 roughly for you is the confirmation level, right?
Yes, because this alternate count would be invalidated. That's why. Okay, so I think this will be a key point towards the end of the month, because it's actually still an uptrend. So definitely there are important levels that I need to focus on before I may say that something is changing. Otherwise, I can just each day trying to call a top, and top will not be formed. So I'm just waiting. If we drop here, then yes, we will continue lower and look for potential PIP on the short side, or on the short side definitely. But for now, I think it's still too soon. But it's definitely on my watch list for sure.
Okay. What you wanted to show the Aussie Yen, right?
Yes, Aussie Yen could also be an ending diagonal. I'm looking here at the weekly chart on the left. You can see that we could be here in the final stages. There's also resistance above 70 here. So maybe we spike to a new high or within these current flows that could extend prices a little bit higher. As you can see here, I'm tracking wave 5. So expecting more upside and then a reversal, maybe with a delay compared to pound yen. But overall, on a longer term scale, I think that we are in some kind of a same degree, final stages of recovery, and I will be expecting a turn. And also, Euro Yen, if we take a look, this one could also be forming here an ending diagonal. As you can see, it's a clear wedge pattern. Okay, it's not an aggressive move to the upside despite new high. Those advances are much slower compared to any previous leg since market turned up in April of 2017. So I think that this is quite good indication that we could be running out of bulls soon and that the reversal will occur. Okay, so I'm watching this one very closely, and overall, I think that
Gregor,
yes.
You're expecting a lot of potential reversals in the yen pairs you've shown us so far, but wouldn't that probably, not absolutely, but probably mean that USD yen would need to go lower than you were expecting the last time we showed it together? We saw it together.
It could, but the question is, but if I would say you maybe 2 weeks back that Euro Yen would bounce, then you would probably ask Gregor, wouldn't dollar yen be higher today? But look where dollar yen is.
I agree. That's why I told you that it's not necessary, but you know, it's likely.
Yes, but so maybe dollar yen will stay in the range in a triangle, but trying to link every pairs, I think that this is very hard thing to do. So rather than trying to be smart where one pair will go because of other, I think that in the first place it must be the price action of its pair, and then trying to go from there where we go. Okay, because I think that price action only of Euro Yen is the most important. So if this one is telling me that we will see a reversal lower, then that doesn't necessarily mean that dollar yen will also continue lower. It just can stay sideways as well.
So you are still, if I understand you, you're still a proponent of the triangle interpretation in the USD yen, right?
Yes.
We still have a leg E left.
Yes, exactly. Maybe Euro Yen weakness will come from Euro Dollar. We don't know that.
Okay, it can.
Right, because at the moment these two pairs have better correlations. Okay, because Euro Yen compared to dollar yen has lost correlation clearly for the last 2 weeks or so. So looking for what will happen because of one pair on the other, I think it's irrelevant at this stage because correlation is not there.
So you want to show us, regardless of a short-term count like a 4-hour chart on the USD yen, and what do you expect?
Yes, on dollar yen here I have this weekly here triangle count. Looking how price will actually respond to this lower trend line. So if we see a bounce, ideally that will be also a time when Euro Dollar will turn to the downside. So I'm really interested if we will get this bounce. For now, we are still dropping. I'm eyeing this 61.8% fib retracement level, and also I have here these levels a little bit lower, around 109.50. So if we'll get a bounce from here, then I think that the dollar could be in a new cycle here.
Is that on the right hand side an alternate count, from what I understand?
Yes, this is an alternate count.
Okay, which in essence points a lot lower.
If we break this red trend line, if we, let's say, just continue straight to the downside with impulsive price action, which is very important, towards 107.30, okay, then probably I would continue to look for more weakness here, maybe even a wave C, or maybe just towards 105, okay, to look for potential just another ABC drop, nothing else. So
I'm guessing it's going to be. I'm guessing it's going to be very hard for your alternate count to be confirmed without also getting some risk aversion in the markets. That's what we were discussing with Blake before. I don't know if you agree.
Yes, you mean that dollar yen, if we not see stocks falling, dollar yen will sooner or later bottom, right?
I mean, I see you have targets there, let's say between, let's say 92 and 95, 96. I'm guessing it's going to be rather hard to see these levels without having also seen the stock market roll over for at least, a small period of time, right?
Yes, but again, pullback here was quite significant on dollar yen since November of 2017, and look where stock market is. So again, it's something that we want to see, but it's something that is not happening.
Yeah, true.
So
looking
for how market should unfold based on history, I think it's inappropriate at this stage because this correlation is simply not there. So I, as Elliott Wave analyst, I'm trying to focus and respect what the market is doing now and not what should be doing based on the price better.
No, I agree with you. Definitely this correlation has decoupled for now, but it's a well-established correlation which at some point is bound to reconnect. You know what I mean? So if we're talking, I'm guessing that for the USD yen to come down, let's say, I'm talking about your alternate count now, let's say to come down to 93, 94, 95, that, that is very likely that will also come with the risk correlation coming back together, having to do with USD yen. Just an assumption.
I definitely agree if stocks would fall, that this price action to the downside on dollar yen would accelerate. Definitely.
Speaking of the stocks, I know we are at very, very elevated levels. Do you have some short-term term count that shows perhaps what the next target is?
Here on daily chart, I'm looking at this price movement since late August. I'm looking as an extended wave 3, and I'm looking towards 161.8%. This comes in around 28.50 or 40, around there. On the short term, I still think that there's more upside here within current cycle that began since start of the year. I'm looking for prices actually to continue higher into wave 5. Actually, I have this 30-minute count here that I just labeled it before I joined the webinar. It's actually the idea that this wave 4 was a triangle, A, B, C, D, E, so running triangle, because wave B moved to a new swing high. And I can see that right now that market is turning very nicely up from that trend line support. So ideally, we are pushing prices higher soon into wave 5. So for the short term, definitely, I think that prices has room for more gains.
But that's only going to be the beginning of wave 4 of wave 3, right? So there is still more upside coming after that.
Yes, but we expect then a larger correction into the red wave 4 as it's labeled here. So ideally, as I said, 28.50 around there.
Okay, nice. Anyhow, this market
market did not make any solid correction for a while, so those who are not in are really having hard times to get in at these price levels.
That's very true.
Nice. So what do we have else?
You almost selected the DAX. Do you have to show us something on the DAX?
On DAX, not really. I see the DAX is rising at the moment, but it could be just a part of this wave 4. Why I'm assuming that wave 4 will go more complex is because if we consider that wave 4 could be maybe finished here, back at the start of January, then maybe this wave 4, as you can see, is very small compared to wave 2. So we may see something more complex here. Flat correction is one possibility. So we are now maybe in wave C or wave B, retesting the highs back from 2017, and then I would watch out for a reversal. But definitely there is a chance that this is going to be a new wave 3. But with what I expect on stocks, on the US markets, I think that this is going to be wave C rather than wave 3 higher on DAX. So I would watch out for just a fake out here above 13,550.
When I said that you're coming on immediately, George threw a question for the CAD Yen. He said CAD Yen for Grega, please. So if you want to show it to him, what you're seeing in the CAD Yen?
CAD Yen, I'm looking for potential triangle here. So the reason is that we actually didn't go anywhere since summer of 2017. So I'm watching for maybe over resumption to the upside, but ideally after a retest of this trend line. But definitely it will be really interesting if this fifth wave to the upside could maybe occur at the same time when I will look for final push up on Aussie Yen. If I just review Aussie Yen, okay, so on Aussie Yen, I will be expecting wave C of wave 5 to reach new highs, and maybe that would be ideal timing for CAD Yen to also turn to the upside here. Okay.
Yeah, when I showed CAD Yen before, I said that the short-term consolidation, if you go down to a 4-hour chart, I said that I see that the next short-term move is going to be to the downside because I see this as a corrective consolidation. So I think that this is probably a B in an ABC, right, Grega?
For wave E, yes. So as I said, the retest of these trend lines.
Yeah, exactly. So I said the exact same thing, that the next short-term move seems to me to be to the downside, but what happens from there is a different story.
Yes, so we'll see how price action will actually respond at those lower levels.
Okay, very nice. Let's see if I have any more questions. Please, Steve, a comment on Euro USD. Okay, Grega, we haven't actually seen it together. So what is your count on Euro USD?
As you know, we have been looking higher for wave 5. Now this is a motive wave, which means we need 5 subwaves within wave 5 before we may say that bullish cycle is finished. So if I label this one, wave 1, 2, this looks like an extended wave, so it's probably wave 3, expecting wave 4, and then push up into wave 5 towards 161.8% extension of wave 4. This would be my levels, and then I would watch out for a reversal on the short-term charts. I think that this is going to be a complex wave 4. Okay, I see some nice support here at 1.2090. So if this will be retested, I would be looking for a bounce. Also, sometimes wave 4 is similar in distance compared to wave 2. So if I take this distance and compare it to, just a second, from recent high, you can actually see that we came out exactly with this level at 12090. Okay, so I think this level could be very interesting for a new bounce to the upside. Also, what is very important is that first leg to the downside, okay, from the highs was in 3 waves. So always when you see a 3 waves from the highs or 3 wave bounce from the lows, we know it's either a completed correction or part of a complex correction. And since we have seen a bounce from this January, actually it was from yesterday, low, very slow, I think that it's going to be a complex correction. Okay, and I assume that this morning I also posted this on Twitter, that probably we are going to see limited upside, and here you can see that momentum actually was very strong to the downside here, okay, back in wave A, but here was very slow to the upside, okay. So actually this confirms the fact that we are not in a new impulsive rise, but rather just another temporary bounce. So that's why I assume that this is probably just a wave B, and that wave 4 is going to be much more complex, which makes sense if you consider, as I said earlier, that wave 4 can be similar to wave 2. Okay.
Yeah, that's exactly the same area I said that I'm looking support for as well, Greg. 121. So we're in complete agreement. You also broke it down to short-term waves. So I think it's people understand that we are still in by the dip mode until we actually get a confirmed top, right?
Yes, exactly. And also you can see that clearly we are now breaking to the downside this general support. So I think that either we stay sideways or we go even lower for wave CO4, as I said. Also dollar index in the same situation. Yes. Okay, so also here's wave 4 that I'm expecting. Not sure if we will get so high here towards 91.75, but definitely that's ideal. That would be an ideal resistance. Okay, previous lows, and also wave 4 equal to wave 2. What is also important that when you have an extended fifth wave like we had it here, okay, then price in a wave 4 will not retrace back to the area of a lesser degree for wave 4, which would be here at 92.65, but rather to the starting point of lesser degree of wave 4, which was here, okay, at 91.75. So that's why I'm looking at this level rather at higher prices here at 92.70.
Gregor, we have one last question. It's from Catherine. If you have anything on the FTSE?
Not really, but maybe I can take a real quick look.
By the way, as we're speaking, SPX is pushing higher out of the triangle. I was writing the chat room before that ideally I would want to see 28.20 being tested today. Let's see if, as it seems, you agree on that as well. Let's see if we get there.
Yes,
because ideally I would want to see a top, a short-term top, either today or on Monday.
Okay. What is price on the futures of FTSE? Do you know?
I'm actually tracking the CFD. I can tell you there.
Okay.
Let me see. UK 100. Here it is. 7,730 at the moment.
Okay, so actually it's the same like this one here. Okay. Because sometimes, as you know, prices differ from continuation contracts.
Oh yeah.
So just let me do a quick outlook here.
It was a very clear correction there. You can see it.
Yes, I'm looking at this price move from here. 1, 2, 3. Maybe this kind of a triangle. I'm concerned about this price action here. A, B, C, D, and wave E. Okay, so
this is a wave 5.
Yes, exactly.
So a terminal one.
Yes, this is what concerns me. That we could see a reversal, and normally from a triangle, once we see a breakout, you take the longest distance or lag, if you want, within a triangle, which was wave B, obviously, and you project it from, first projection is from the end of a wave E, which was triggered recently. The second, more aggressive targets to the upside would be here, from a breakout point. Okay, and this one still has a room for for 8,000. Okay, so but we are in some kind of a final stages, I believe.
If you go down to the daily, I can tell you two interesting facts. If you go down to the daily, first of all, it looks like an ascending wedge. One of our chatroom members, Kate, she was shorting it, and I told her that I like her short for two reasons. If you project the high of D to the bottom of E, you will see that we touched 1.8% to the pip. So that high there, that fresh high that we had was the 161.8 extension of the last move lower.
Yes.
So that's point one. And point two, from a basic technical analysis perspective, I know that this is not an ending diagonal from an Elliott wave perspective. It looks like an ascending wedge a little bit. So if you project the last part of the bullish price action that we had, it is a little bit like an ascending wedge, which has currently broken lower. There you can see the ascending wedge a little bit. Because the price action is ascending, but a little bit contracting as well. So it's like a contracting triangle on the way up.
Okay, can you hear me now?
Yeah, now we can hear you.
Okay, so what was, I didn't, oh, what was the case? Because I had kids here in my office right now.
Yeah, I heard it. Is that, first of all, we tagged the 161.8 extension of the last move lower. That high that we got in just below 7,800 was the 161.8 extension of the last move lower. So from the move lower that came from 7,590 down to 2,075. So that's point one. And point two, if you look at the left, more of the left side of the chart that you're showing now, it also looks a little bit like an ascending wedge. The price action. I know that this doesn't go by the rules of an ending diagonal in Elliott waves, but from a basic technical analysis perspective, it's a little bit of an ascending wedge there. If you project it. No. Ascending wedge. I'm not. No, that's a descending wedge.
Oh, okay.
I'm talking about the price. Yeah. Yeah.
Okay. Something like that.
Yeah, more or less. It was. But to be honest, the move lower so far does not look impulsive to me. Looks more like a bull flag to me. So I don't know. What are you seeing from here?
I don't know. I'm just looking at this. I don't know. Was a new high mid here on January 16 or no?
No. On my chart, no. No, it wasn't. It was like one handle lower or something like that.
High sense. Yes, it was not. So this can be actually counted in 5 ways after all.
Oh, you mean a 1, a 2, since it wasn't a 3, a 4, and oh yeah, you're right actually.
So, and resistance should then be right there.
So that's the confirmation level, or anyhow the invalidation level of a possible bearish turn lower.
Yes, watch out for these two levels actually. So we'll see for this.
So as long as we have below there is a chance.
We also already have some overlapping price action here to the upside. You cannot count this recovery in 5 ways.
Perhaps a zigzag or a double zigzag unfolding there or something like that.
Yes, but the fact is that this overlapping movement. This was no overlapping decline, and this is overlapping rise.
Okay.
So, and also 50, 61.8% fib levels are there. So, how do we worry careful once we reach these levels.
Perfect. We have more questions coming, but guys and girls, we've already exceeded by a lot our standard time. So more on Monday. And thank you very much, Gregor, for showing up even late.
Sure.
I know that you have a very tight schedule. Thank you very much.
Sure, no problem. I always like to join. Have
Thanks
a good
for
weekend.
sharing, Greg.
We always like having you. Thank you,
Thank you.
Coach. Have a good week, everybody.
All right, everyone. Have a great weekend. Thank you, Steve, Greg, Blake, Base. We're going to kill them next week. Do your work over the weekend. If you're not a subscriber, do it today so you're familiar to navigate the traffic light page with us next week. You're very welcome. Alina, Luca. See everyone Monday. Enjoy your weekend. Adios.